Welcome. Josh Olson. I said it 3 times. I didn't say it 2 times. So I don't know if you are still owed a Tesla share or not, but we will talk about Tesla tonight. And yeah, we are back. Decent day for the market, a really good day for growth stocks. The ARK ETF was up about 4% today, so not bad. What's up, Seek, Frank, I am AK in the chat as well. And yeah, quite a bit to talk about tonight. We did have FOMC as well today. You saw a sell-off with that. And apart from that, we're just kind of flagging in the market. I'm going to bring that up. Chinese stocks doing pretty well. Crypto stocks today doing pretty well. Ethereum getting a little bit of a breakout. We're going to talk about that in a second. And yeah, I'm going to pretty much break down all the different markets and give you my thoughts on them. So sit back, relax. The stream is back. And let's get started with crypto. All right. Bitcoin, still not much has changed, but you were getting to the point where if we can just retest this trend line of this downsloping channel, then you have a partial decline, which gives you about a 70-something% chance of a breakout, typically. All right, so if you can return to that upper trend line before revisiting this lower trend line, got out, then you have a pretty decent chance of breaking to the upside, and we are waiting for that currently. Ethereum looks better technically to me right now, though. You can see it had a pretty good day today, and it kind of spiked above this little consolidation range it's been in. Maybe even kind of a little bit of a bear flag was developing there, and it broke above that, at least slightly for right now. So it's not completely in the clear right now. I think your next resistance is around 1350, but you still have a little bit of minor resistance here from these highs back in the summer. But the higher lows are being created. Hopefully higher highs come next, and who knows, just like how we talked about it on Bitcoin, you get that partial decline, get that 70-something% chance of breaking out of this and start a new wave for the crypto space. We will see. It's been quite some time now of digesting this move down. Let's take a look. Yeah, more than half a year of pretty much going sideways since a major sell-off. I think about a 78% retrace was achieved. Actually, no, an 83% retrace was achieved from COVID crash lows to all-time highs. Even on the weekly, if you chart a couple of these highs over here, you're kind of very quietly breaking out of this downsloping wedge. So not too bad. Let's move on to other markets. The US 10-year starting to pull back. Had a very textbook move after breaking out of that wedge. We talked about it last week. Now you are pulling back. You are flipping this resistance over here into a support. That previous support you were flipping into resistance. I haven't streamed in a little bit. So you're kind of getting that support resistance flip. You have a little bit of hidden bearish divergence developing on the daily. Let's move on to crude oil, which rejected the breakout of this downsloping wedge. It pretty much tapped that trend line, and now you are seeing the move lower. It also kind of had a mini bear flag right there. That broke down, and now you are retesting lows really since December of 2021, over a year ago, and you're back under this support from last September. So not great there. You also have some confirmed hidden bearish divergence on the daily. Let's move into metals now. Gold, it had that rising wedge developing, and it broke it to the upside. I see Keanu Trades in the chat right now. Keanu Trades talks about this. When you have these bearish wedges and they break to the upside, that could be a pretty bullish move. So gold is actually breaking that to the upside. The next resistance I have is 1876. Just a beautiful run ever since it broke out of this downsloping channel or wedge that it was in for like 200 days. And then silver as well, going a little bit higher. Maybe you could start to draw out some trend lines like this. It might be actually testing a breakdown, but you saw what happened to gold. It was able to break it to the upside somehow. So we'll see what happens with silver. The dollar currency index did get a breakout of this falling wedge. I saw Zeke also talk about this on his stream. So you have a breakout and a back test taking place for the dollar currency index, some support around 103.5. And then finally for other markets, China doing pretty well, and this is something I've been talking about. It consolidated, the Hang Seng Index consolidated at the 200-day moving average for almost a month. It broke above it with a bullish engulfing candle on the 3rd of yesterday, on the 3rd of January, and today you saw the follow through price action after that breakout. Chinese stocks having a really good day. NEO was up 10% today. It's kind of got a little bit of a double bottom forming here around $10. BABA was up 13% today, gapped above the 200-day moving average. Just a couple weeks ago, it broke out of this major falling wedge. This is a stock I've showed multiple times on the weekly. It was a pretty nice setup. I can actually redraw it right over here. Like a massive bullish shark. There you go. It was kind of in between the 886 and 113 retrace. You also had a lot of classic bullish divergence on the MACD, pretty much at this first low, then you created a second low. Both of the things I just mentioned, this harmonic and divergence, if by any means you are clueless as to what those things are, or you have an idea because you watch the streams and you've watched the course, but you want to learn more, you want to learn the different types of harmonics, the different types of divergence, when it's better to use divergence, when it's not better to use divergence, how to trade those indicators. If you want to learn all those things, look at the pinned chat. Me and Kiana Trades this Saturday are going to be doing a webinar at 4 o'clock Eastern time, 1 p.m. Pacific time. So if you want to sign up for that webinar, you can use code $10 or coupon code $10 at checkout, get $10 off. As said in the coupon code. Yeah, I did a webinar with Kiana Trades this past Monday, like 2 days ago, and it was amazing. A lot of great feedback. I gave an intro to divergence in that, and so many people wanted to learn more. So if that is you and you want to learn more, make sure you attend that webinar. It's not just that. We also have Jordan, who's going to be also talking about, I believe, volume profiles, Candlestick Nick. We have a lot of great speakers in there. I think Zika's in the chat might be able to moderate that as well. So it's going to be a great group. Go sign up for that pin chat if you want to learn a lot in like 2 to 4 hours, I think is the time frame that we're going for. But yeah, this is an example of what learning those indicators can do for you. I talked about this on the stream because I knew what these indicators were months ago. And if you were able to position yourself correctly off those lows or even near the lows, you could be up over 50% on that position. On a stock that was considered dead to so many fundamental investors, even just as a trader, not even as an investor, you could have profited over 50% very easily from 2 little patterns on a chart just by knowing them. And you can learn that in 1 day. So if you want to kind of take that opportunity, it's the pin chat. Go check that out. But yeah, let's keep going with the Chinese stocks. Even XPEV was up 14% today. You got some hidden bullish divergence developing on the daily. Right now it's nearly confirmed. Kind of had a little bit of a bull flag here as well. Pretty nice, broke out of that today. This has got some room. I don't really see any levels until $18. You can see that was kind of where the stock opened at, and then it was lows from the beginning of last year, in the middle of last year. It's also just under the 200-day moving average. Might take some time to get there. Who knows, maybe this eventually turns into a bear flag and everything, but for right now, that's like the next major level. Of course, you have this minor level around $13, even a gap fill there. So you have some stuff before then, but that's like your next major level. So pretty big breakout going on in a lot of different Chinese stocks right now, as you can see. The one that really hasn't, it was up 10% today, but the one that really hasn't moved a lot off the lows yet is NEO, which was of course one of the best stocks in the market in 2020 and 2021 it topped that actually. It was one of the first to kind of peak, but 2020 off the lows, I mean, percentage wise, I don't know if there were a lot of stocks that went up 4,000%. A lot of stocks went up hundreds of percent, but this one went crazy. And now it's all the way back down to pretty much where it was at just after the COVID crash, kind of double bottoming. I think a critical level though for NEO to get back above would be 1175, which was that major low from last May. So that's just a quick look at some Chinese stocks. Let's talk about the US stock market right now, heading over to the SPY. The hidden bullish divergence, potential inverse head and shoulders theme that I've been displaying on the stream for the past couple of weeks is still valid. It's not confirmed, but there is still the potential for it. We were still kind of trying to curl at this right shoulder. On lower time frames, it doesn't look as good. It looks kind of bear flag, kind of bearish pennant. As you can see, that's the 4-hour time frame. I have a bearish pennant drawn out. And then on the 1-hour time frame, I have this bear flag drawn out, or ascending broadening wedge. Got a little bit of classic bearish divergence too. So lower time frames on the market are a little bit worse looking, but the higher time frames still look okay. So even if you do break down from those lower time frame bearish patterns, as long as we can even hold anywhere above this blue zone, even if all this breaks down, like right over here, that breaks down and you sell off, you can still have the right shoulder down over here. That would even be more parallel to your left shoulder. So it's not the end of the world if this short-term consolidation halts that potential inverse head and shoulders for now. Again, this is a daily time frame. This pattern's literally been developing since last June. This could take a long time to even play out if it does in the first place. But just remember, just because there's a bullish pattern on the daily does not mean for the next 2, 3, 4 days you're going to go up. This is a much larger idea than that. Maybe the hidden bullish divergence helps out a little bit short term. We will see. Let's go down to really low time frames now and talk about the price action today, but also recently. One thing I do want to point out is the 383. That's been such a big magnet level for the SPY since just before Christmas. All right, you can see that was used as resistance for pretty much all these days over here. Then you broke above it, tried to flip it into support, failed to do so, went back down over here. You've spiked above it a couple of times, and the times in which you have spiked above 383 on the SPY, you've gotten up to about 385. Now that was a gap fill. I've talked about this on the stream already, and that's pretty much flipped into a resistance at this point. So what you're seeing right now on the S&P 500 is a multi-level range. It is still kind of range bound. You have these lower supports, you have some intermediate supports and resistances within this range, but overall, if we clear up all this noise on the chart, you're kind of just ranging. If we just look at it on the low time frames, it's just one consolidation range. Yes, if you want to be very accurate with it, which is what I showed you on the 1 hour time frame, you could draw it like this too. Upsloping channel, bear flag. It's actually really pretty on the 15-minute chart compared to the 1 hour. But even apart from that, even apart from your trend lines, it is just one consolidation range. So we are still within that. It's kind of frustrating for me personally. Some people love this type of chop. They trade within it. For me, I like the larger moves in the market. This is really what you're showing going into tomorrow. Post FOMC, which was pretty much right over here. Actually, no, it's wrong. It's going to be at 14. FOMC was pretty much over here. You pretty much sold off, went back up to resistance, sold off, and just kept hanging around that level. You've got two very little levels to keep an eye on for tomorrow. The first one, major level going into tomorrow in low time frames, is 381.2. You can see not once, but twice. On the 15-minute chart, you bounced off of it very, very nicely. If we go down to the 5-minute chart, you can see that. Very clear support level heading into tomorrow. You can even see this used to be used as resistance and support very recently as well. So that was held. And then in terms of resistance, again, all the way up over here around 385, almost 386. Those are your more shorter term levels just apart from that range. There's a lot of levels though. That's what I was saying. It's a multi-level range. This whole area in general is just chop. But if you want the levels within it, those are your levels. There's a lot of other ways you could view this as well. I did send this in premium today, but kind of that like cup and handle look, even though the handle's pretty steep at this point. Something like this, or maybe even draw out a bull flag. There's different ways to look at it. But that's pretty much the consolidation range you've got going into tomorrow with a little bit of 15-minute hidden bullish divergence. All right, heading back over to the daily, you can see there's still this gap fill at 388. That on the 1 hour chart is right over here. I have a lot of resistance before that as well. So even if you do keep curling up, whether it's in this channel or you somehow break above this channel, this is going to be resistance if you get above that consolidation range. If you break down, zoom out, you can see over here that 368 to 373 range is a major support. So those are your next major levels for the S&P 500. Let's move on to the Qs. Testing a triple bottom here. All right, you have one bottom around 257 to 260 from October, another one from November, and right now you're working on it. I have shown this on the stream. Let's use this low. You have a little bit of a bullish shark, okay? A little bit of a bullish shark developing. You're curling off the pattern completion zone just a little bit. I think getting back above this low from June would help. That's around 269.4. But yeah, this is the level, because I've talked about this on the stream. If you can't hold that, then you have that massive inverted cup and handle look, which is just not pretty. So to prevent that from breaking down, this is where you want to see a reversal. Pretty much that's it for the Qs. It's very similar on the low time frames with that consolidation. The Russell 2000 starting to bounce a little bit off this recent consolidation. Your MACD is getting pretty close to flipping to green. I think in general, if you were to solidify a higher low, because your last two lows were right around 163, they were very equal. They line up with a little bit of resistance here from October of 2020. But this high from September of 2018 is kind of where you're holding right now. So you're kind of holding the top of this zone rather than the bottom of this zone, which to me is a little bit bullish, but you want to see more continuation first. And again, apart from this little move in August, which was just to pretty much test the 200 moving average, which I think pretty much all the indices did around then. Yeah. Apart from that move, you've just not been able to get back above 188 until you broke that support, or since you've broken that support. So something to keep in mind. Then we have the ARK ETF, and this one I'm not even going to really say is technical, but the theme today was just a lot of growth stocks outperforming. So I am going to look at a lot of growth stocks individually right after this. But you're still under major support on the ARK ETF. This whole entire zone over here, it dates back to like 2017. You're still under that, but short term, you're getting a nice little bounce in some growth names. Who knows if this turns into a bear flag, and then you just kind of flip that previous support into resistance and then drop again. But for right now, it's okay. I think it's way too small to even call this a bear flag for right now, at least on the daily time frame. Just like the Russell 2000, the MACD is getting close to flipping green for the first time in the daily in about a month on both of those indices / ETFs. So those are your indices. Just really quickly before we go into individual names, the VIX. On the daily, you have a little bit of a triangle forming, something like this. All right, you're still kind of right in between that. I'm gonna delete this yellow line. You're still kind of in the middle, so it hasn't broken in either direction, but you do also have a little bit of hidden bearish divergence. That is something to keep in mind. It's not like a perfect head and shoulders. You don't really have a left shoulder, but you kind of have like a head and right shoulder. So just like the psychology, that is not great, where you're kind of making a well-defined lower high. So if you were to crack under 19, which you've held since pretty much since this bear market started in January of last year, you've held 19 on the VIX. Falling under 19 would pretty much break that bear market support level for the volatility index. So that's the next level to keep an eye on. If that pattern does break down and the hidden bearish divergence plays out at that point, maybe this inverse head and shoulders on the SPY plus a descending broadening wedge could play out. But again, that could take some time. All right. So those are my thoughts on the market. Let's move into the swings first. I did alert 3 new swings to all of you for free in the Discord yesterday. The market was closed on Monday. So we're gonna look at Fisker first, which has been alerted for a while now, but let me give updates on that, which was up 5% today. And I'm gonna go over on stream the 3 new large cap tech stocks I alerted as swings. So we'll take a look at that. Keanu Trades in the chat said, after tomorrow, I'll probably not have discount code. It just depends if that code sells out sooner. So we will see. Space Punk X says, so you have to pay. Isn't that all free in the Discord and your free course? So money grab. Yes, that is all free. You can see my harmonics video for free. I have stream segments on divergence, resources in the Discord. All that stuff is free. I'm not saying it's not free. This is a webinar though, so it's going to be multiple speakers, not just me, and I'm going to be going very in depth. You're also going to be able to chat. You're going to be able to ask questions. So it's not just me making a video and just sharing it with everybody. It's live. I'm going to be there. People are going to be in the chat, and it's going to be more of an experience, not just like a video. And it's just going to be an interactive thing. So if you are fine with the resources that are free, I mean, that's completely up to you. But this is something for people who want more hands-on experience and maybe some things I haven't even mentioned in those videos. And that's why I really went into the point of talking about how you can use them to execute trades, right? Because I presented what I know about harmonics and divergence on streams and in my course, but I don't talk too much about how I use them when I'm trading. So that's something else you can get in the webinar, but to each their own. Zeke says, guys, if you want to pay and go, then do it. If not, then don't, leave it at that. SPY 4-hour triangle plus VIX 4-hour triangle. Yeah, 2 big triangles. We're getting a little bit of confusion. Let's just see which way it breaks. And the guy saying Discord is free, come through and ask away. Alfredo saying Professor Champ. And Space Punk saying I'm in this server, don't chat much. Chat more, I don't know what else to tell you. All right, so let's get into the swings. All right, first off, we have Fisker. Classic bullish divergence was the big point that I was making. All right, for the past couple of weeks. That confirmed. You're bouncing up a little bit. You put in 2 mini lows around 660. And this is something that I want to go back to the Russell 2000 for a second. You had these well-defined lows from last fall, right around 650. Now just slightly higher, literally only 10 to 15 cents higher. You're making 2 new smaller lows. The Russell 2000, very similar. You had well-defined lows from last fall at a lower level. Now you are putting in lows at a higher level. Something we haven't seen on a lot of small caps in a long time, higher lows. They're not super confirmed yet. You need more price action. So we'll see what happens there. The wedge, again, it's not the prettiest looking wedge. It's just really it's just a way to visualize at this point downsloping price action in which you somewhat have been consolidating. You're not kind of selling off as steeply as you were before. Let me correct my grammar. And now you're going a little bit more of sideways. You've pretty much been going sideways since October, so that's 2 months now of just sideways price action on the weekly time frame. Kind of have that wedge drawn out as well. Again, also classic bullish divergence there. It really hasn't done much. So there's been variables. It hasn't moved too much. We're still waiting to see what happens. We'll just see which way that range breaks. All right, now moving to the new alerts. First off, Meta, this was alerted yesterday. It's already up about 3%. And maybe, or not maybe, but breaking out of this downsloping channel. You have 1, 2, 3, 4 touches on this supply line. Very slightly. You need a couple more days for confirmation. You are above that though. Not only have you broken above that, 123.3, you can see it was resistance right over here. It was support here. Let's go back to 2018. It was your low in December of 2018. Kind of your resistance in December of 2016. Your support in August of 2016. 123 is a critical level. You are above it for right now. Currently, the technical breakout is there. All right, you need more confirmation, but Meta has broken out to the upside. Today it did top out around a gap fill. I have talked about this on the stream before as well. So you pretty much tapped that gap fill. So hopefully you can just break above today's high of day and stay above that critical level. If you can't, then maybe support around 120, which is another gap fill to the downside. And that is what is going on with Meta. I know Cheddar Freeze has done a great job of sharing larger time frames in the technical trade chat for months now. So this is a very critical zone. If it can get back above it and hold it, that's where maybe the targets are able to hit. Then we have Google. This one is a little bit more smaller. It's more short term in terms of the harmonic. You have a bullish shark over here. You're already curling at the pattern completion zone. I like how the MACD is moving closer to green. You have bullish convergence on the daily, which means higher low on price and both of your oscillators. And not only that, the context, if we go back in time, this area in December of 2020 was a consolidation zone. You broke it to the upside, and you can just see gap up, consolidate, gap up, run. So I don't know if you're going to get a gap up or anything, but if you can just hold that consolidation zone, again, maybe the target's hit. If they can't, I put the stop under the X point of the beginning of that harmonic. And then finally, the third one, Amazon, another very small harmonic, but good context, all right? Got a bullish butterfly over here. Classic bullish divergence confirmed on the daily on both oscillators. And this $83 level was your COVID crash low pretty much. Also 2019 lows. Also, not lows of the year, but it was a major low. Also July of 2018 support. So big levels, mini harmonics, but also a little bit of divergence. We'll see what happens, all right? Also tight stops with a 5% stop loss. So I'm giving them a chance. We'll see what happens. I think it's been over a month since I've loaded Swings Outsider Premium. We'll see how they go. All right. Now let's move into some growth names. First, I just want to start off with Mara. Let's see if there was any news related to crypto or anything. I know Bitcoin and Ether are up a little bit today. But you can see right over here, Riot blockchain Bitcoin production rose 26% in December versus the prior month. So you got this today. The company earned about $5 million in power credits as a result of curtailment activity, equivalent to about 290 Bitcoins, using the December 2022 weighted average daily closing price of 16,967. So they sold about 600 Bitcoin, generating net proceeds of about $10 million, and held around 7,000 Bitcoin as of December 31st, 2022. So huge day today. Let's just talk about the technicals after this spike. To me, it looked like it was in this downsloping channel. It was testing the support and it failed to hold it, even maybe flipped it into a resistance. I'm not sure if this dates back to anything. Actually, it does. Look at that. Look at those levels. Support here was resistance. Major high over here. But that is your big level, 533 to the upside. I guess you had a little bit of a wedge here that you broke out of just a few days ago. That. Make it a different color so it doesn't blend in too much. So you had some stuff. At this point, I think you're already moving off the lows. Your next level is 533. There's not much else to say from a technical standpoint. I just wanted to bring that up. AMC up 4% today. good, but also that's nothing compared to how much it's sold off recently. And on the 1 hour though, you have a little double bottom forming. This morning actually, I was looking at both AMC and GameStop, and I ended up alerting GameStop as a option idea, but I was also thinking about AMC. I think it also would have worked out if I did that too, because it was around 11 a.m. So it was kind of like right here, which is when I put the GameStop alert out. It was like right there. So it still did go higher. That probably would have hit 20% profit at least. But what I did end up alerting today was GameStop calls. Let's see. Pretty much right after this wedge breakout. And then this move over here pretty nicely and quickly. The GameStop calls went up 50%. Yeah. So that was cool. But also what I'm still watching for GameStop. First of all, you can see that $17 support level. It kind of went back down to it later in the day and bounced off of it slightly. But on the 1 hour chart, you have classic bullish divergence. This double bottom forming, this down sloping wedge, and it's not textbook, you're a little bit deep on the steep point, kind of a bullish crab harmonic. So just something to keep an eye on. These are low time frames. On the daily, I still think under 1954 is bearish for now because it was support very clearly here twice, and then kind of at the high of day over here flipped into resistance. So it's not out of the clear yet, but something to keep an eye on low time frames at least. CLOV today was up 5%. This was on the weekly watch list actually, for premium members. A lot of the weekly watch list names did pretty well today actually. Some growth stocks in there as you can see. But let's see where CLOV was at. Also a lot of inverse head and shoulders as you can see right there. CLOV right? No, it's WBD. Sorry. Let me try to find CLOV right now. Or it might have been last week's. Might have been the week before. When did I have Fisker and CLOV on it? That's Fisker. When was this posted? This was yesterday. Or Monday, not yesterday. Right over here. There we go. There were just so many takers on this week's watch list. I thought it was in the one before. But yeah, I also talked about this on stream last week. Classic bullish divergence and this wedge developing. That was down around 92 cents. You're around $1 right now. So again, compared to how much it sold off, this is not a major move, but it's a good start. You already see that classic bullish divergence starting to play out a little bit. You've got about 4 days of upside after that little wedge breakout. We've seen this before. We saw it over here. We saw it over here. We saw it over here. It's only happened maybe 4 or 5 times since it topped out at the 200-day moving average around 330 in August. You've only had 3 or 4 of these like 3-day green streaks or whatever before selling off again. So now it's time to see the next 2 days. Can you continue to hold those gains or not? The next level is around 121 if you can. You can see the support from the end of November, beginning of December. That's kind of your next level. Again, this is really the moral of the story, what I've been trying to say on CLOV. You can get these patterns and variables, but it's really just about waiting until the natural price action flips from lower lows and lower highs into higher lows and higher highs. Hopefully I said that correctly because it's a lot of like similar words. But yeah, nice day. Moving on to Lucid. This is in a down sloping channel, up 5% today, and it's crazy. Like you can get 5% days now, and it looks like nothing, literally nothing. So we'll see what happens. But just imagine like if this looks like nothing, even kind of this would look like nothing on this chart compared to how much it's sold off. But even that type of a move will be almost half of your money, whatever you invested, you'd be making back in profit. I'm not telling you that this is going to happen on Lucid for sure. I'm just trying to show you like visually on the chart, like how much percent little moves are, or what little moves look like when you zoom out on these charts. So we'll see what happens. I don't know if this is any important fib extension. Kind of is a little bit under the golden ratio, the 1.618. But you have been oversold since pretty much the beginning of December, and you haven't really seen much of a rally since then. You could even maybe draw out like a shorter term supply line or even wedge like this within this down sloping channel. Extreme oversold patterns on a lot of stocks, but we are still just not seeing higher lows and higher highs. So it's like it's hard to trust these patterns because you could just get very little rallies off of them and then sell off again, kind of like all these little moves over here, until we see that hold for a little bit. This is something that I was talking to, I think, with Gold Miner yesterday in our community voice call. So we'll see what happens. But yeah, just an update on that. If you didn't see it on Twitter and Discord, I did say I was going to be starting off this year doing community voice calls in the Discord. It's free for all of you to join. I help you journal how your trading day went. If you have any questions, I answer them every day at the close. I've done it so far this week. I know it's only been 2 days, but I'm pretty sure that like a lot of people are still at work and stuff, so I'm deciding to move that back to like right before I stream. I think I'm gonna start streaming around like 8:30 consistently, so maybe around like 8 o'clock for like 15-20 minutes. So at that point everybody's like home from work and stuff. It just makes it better. So I'm probably gonna start that in a couple of weeks. We'll see. Also, another announcement on top of that, I know I already talked about the webinar, I'm just talking about that community voice right now. If you've been living under a rock, new podcast, all right? Trading Addicts podcast at TA Addicts Media on Twitter, at Trading Addicts Media on Instagram and TikTok. The link to the YouTube channel is in the bio of the stream, or is it called the bio? It's called the description. Sorry, I'm trying to put a lot of things together right now. Yeah, shout out to Zeke, shout out to Keanu Trades, Jordan, a lot of other people involved in this as well. It's going to be great. The first episode is coming out on Sunday. It's going to be a trading podcast, but it's not going to be a trading podcast. Almost already at 500 followers on the Twitter, so we announced this on the first of the year. So I'm really excited for that. And yeah, there's a lot of stuff that I'm excited to release with that podcast, involved with that podcast. Go subscribe to the channel, go follow the socials. There's a Discord too. You can find that link on Twitter. It's going to be amazing. We're going to do the educational stuff. We're going to talk about a lot more than just that, though. It's going to be sports talk. It's going to be like current events in the market. We're going to have debates. There's going to be a lot of like thought-provoking conversation. It's not just going to be, all right, guys, this week we traded this and this, and then next week we're looking at this stock and we're looking at the SPY for this level. It's not going to be like that. We're not doing that. We're going to really try to bring up topics that are like trending on Twitter, on Reddit, and just give our thoughts on stuff like that. And maybe even sometimes just talk about anything, not even related to trading. So go check that out. First episode is coming out on Sunday. Yeah, just wanted to bring that up as well. Let's keep going into more names. SOFI. Still under the major support, or major previous support, around 485. It's been consistently testing that as resistance. It's back above. I've said it before on the stream. There is room. There is room. Maybe could even draw out a trend line like right over here. Got a little bit of a wedge forming. Keep an eye if that breaks out. At some point, a lot of these stocks are going to reverse. And we've seen these types of patterns before. Like, this is nothing new. And a lot of the times, they've maybe given you like a swing trade, but no major reversal. So it's just, I'm going to keep charting out these patterns. Some of them are going to actually end up being your bottoms. Maybe in 2 months, maybe in a year. But most of them are probably going to just give you a swing trade at most until we get reversals. So I'm just showing you what's on the charts right now. Coinbase next, up 12% today. I don't know if there was any news. Not seeing anything, but pretty strong day, up 12%. On to lower time frames. I think on my last stream I shared this wedge with all of you that I charted out like right on the stream. You got to break out of that. It still is under previous all-time lows, like $41, $42. So that's like your next big level. I just drew it out right there. But little wedge breakout, not too bad. And let's look through some large caps now. Apple up 1% today. On the daily, like it's only 1 to 2 days under this support, but on the weekly it looks not great. It looks not great. Major double top neckline breakdown. You technically do not have a confirmed weekly candle close under. You would have to wait until Friday at the close. So if you do close above 129 on Apple this Friday, then I guess it's not over yet. You didn't even have a hammer candle last week. But if you close the candle under 128, 129, that's pretty ugly looking, at least on the weekly time frame. Daily time frame, maybe you start to get oversold. You're not too far from it, but larger time frames, I don't know. He also had Microsoft gap down today. I'm seeing from Seeking Alpha out of all publications. UBS slashes rating on cloud worries. I'm sure that's not fake if it's about a downgrade, but they're worried about its cloud business. Cut the price target from to 250 from 300, and described their cloud service or providers as weak. So pretty rough day for Microsoft today. Next support is down around $213, dates back to 2021, but also this recent low you put in on November 4th. That is Microsoft. AMD was up 1% today. You have a little bit of hidden bullish divergence developing. This one looks different to me compared to some other large caps. You're still under this major support level around 70s, but it's a very large wedge. Your MACD's curling. Your We're making a higher low as long as it holds. I don't know about any textbook harmonics there. It's a little bit too weird. But if you can break back out of that wedge, at least maybe a move up to the lower 70s to retest that previous support could be possible. And let's see if there's anything else on my watch list I want to talk about. Disney on the daily looks a little bit choppy. You could draw out like a wedge and stuff here though. That, and you have somewhat of a support developing here around 85, but on the weekly time frame, classic bullish divergence nearly confirmed. Maybe a little bit of a bullish bat, scuffed one. C point's a little bit shallow, E point's a little bit deep as well. So it's not a textbook bat, but kind of similar. Let's zoom out a little bit more here. This is the major level, right? 80s in general, your 80s. I could even draw out a zone over here, like 78 to this. Haven't been under this since 2014. Okay, in 8 years. Well, it's 2023 now, but I'm just gonna say in 8 years, haven't been under this zone. Maybe you bounce off of it. Longer term, you could make the right angled ascending broadening wedge point, even though I don't really see much of a partial rise here. You could make that, but then shorter term, you could also bring up kind of this wedge or even like a dragon pattern. It's a very big make or break area for Disney on the weekly chart. That's just something else I wanted to bring up. And let's see what else. Jorge, I'm sorry if I'm mispronouncing that, but Jorge says, last time I heard of CLOV was in the short squeeze of last summer. That was probably leading up to earnings. Yeah, I haven't talked too much about it since then. There was a little bit of a support zone on like $2, but it ended up cracking it. I've just been waiting for the price action. ATF, the meme master, saying I've been lurking for too long. Need to think of a new meme to post. We will be waiting, as the guy said. And yeah, go follow the Twitter so you can put that in the chat. Max, we're going to look at Netflix. Sure thing. Also, if you didn't hit the like button, just consider doing it. Just consider it. Netflix to me is still in this major like gap zone. It broke down from a rising wedge, sold off a little bit. At this point, that's in the past though. So I just see this as chop in between this gap zone. Acti is getting closer to green. You do have a short-term upside gap around like 314.6 on the daily. And then short-term support like 275.77. But not a lot to talk about like short-term on the daily. We really zoom out here, this could be looked at as like a bear flag, or at least it might be too large for a bear flag, at least like an ascending broadening wedge. I don't know, this is a very I'm not seeing much of like a strong signal on this chart. On the weekly, it looks like a bear flag with hidden bearish divergence. You don't have too much resistance on the weekly time frame until 3.5. And Zeke said I have not looked at monthly charts in a long time, Zeke, but I can look at SPY and the QQQ on the monthly. You got hidden bullish divergence on the SPY on the monthly, and then the Qs on the monthly. That could take months, maybe even over a year to confirm though. But let's see. December was a bearish engulfing for the Qs. Same for SPY. I don't know. You had a bearish engulfing last June, and then in July the SPY was up 9%. You had a bearish engulfing last April on the monthly, and the SPY was technically still green in May. But you also had a bearish engulfing last January, and then you were down like 3% there. So I don't know. But just in general on the monthly, if I'm just looking at this like any chart, you got hidden bullish divergence, maybe a little bit of a bull flag here. Look at fibs, you fell down to about the 50% retrace. It's probably your big level to hold.
What this is saying then is that just as you don't know how you manage to be conscious, how you manage to
skip that. All right, so that's what's going on with SPY on the monthly, and that's pretty much going to do it for tonight's stream. I think there was a lot of important updates. Hopefully you enjoyed it. Subscribe if you're new to the channel and you're not subscribed. I don't know what you're waiting for. But yeah, again, just some reminders. Podcast this Sunday. All right, that's going to be in the description of the live stream if you want to go subscribe to that. And webinar on Saturday. Use code $10. It is the pin chat if you want to sign up. Divergence, harmonics, volume profile, gap analysis. All right, if you want to learn that type of stuff in a few hours, you're not going to be a master in a few hours. I'm not promising you that, but you're going to get a lot of education in a few hours. I am promising you that. If you want that, and that can help you trade forever, it is the pin chat. Go check it out. And also check out my free course in the description as well. All right, thank you. Have a great night. I'll see you tomorrow night on the stream. Peace out. Oh, one more thing. Join the Discord. Discord.gg/free trading movement. Link in the description as well. I want to get to 2100. I want it. I want it now. Get me there. Get us there. Sorry, let me correct myself. Get us there. Do it.